Welcome to TradeTheNBI.com. This is John. This report is for the 30th of April. Well, we're about to end the month. Of course, we had the FOMC, and that led to pretty nice up move. Interesting thing, though, the stats are that better than 60% of the time on the day after an FOMC, you get a down day. Yesterday, we had the pop, and then it sort of flattened out, but it still ended up skyrocketing towards the end, and of course we're just filling that move back in place. Oh, actually, we should go over. We do see even the start here, the magenta below yellow, red below blue, and almost blue dropping below the green on the NBI. Those would all be weak signals. You still have to get that NBI cyan over red. Not quite there, but it's working towards it. But that just means you may see some. Well, we're already seeing some intermittent weakness within the setup as it is. Likewise, similar readings. We actually had the decline of red under blue from the NASDAQ earlier on the flat finish, so it had already begun there. Still similar situation. It's just you have the potential for more decline when you have steel dipping below cyan, even when it's under red, and it's usually a short-lived situation, but it can grow, so we just go with what the numbers give us. Gold just kind of flatlining at this particular point. It's just in a gentle, I guess you could call it easing any, what some might call overbought conditions, so we're just regrouping, so to speak, in the euro, just holding on to these massive gains. We did have two positive extremes, and that just would dip it right back to the 125 range. Looking at Bitcoin, it's had its little run up, about the 50% of that decline, and it started to meet some intermittent resistance with dips and new buys. This is PNT2A anyway. Just for reference, from an intraday standpoint, well, we can look at where we're at right now. We've started to decline from the end of yesterday, and that produced a nice fillback of, well, just a lot of positive extremes. In fact, we're reaching the lower end of that. Remark these other ones. There what they are. A whole series of them running through, well, beginning right back here, which is this first primary one at the 41.92. And then we ended up with a series of other ones, just a couple of points away, and then through this whole run. So the next significant one where retrace was, ironically, to the 4,200. That doesn't happen all that often, but that became a basis point for it. Interestingly enough, though, when we see the rising lows, we expect in weakness. So when down moves come, I was expecting a move to the 100%. From the 100% down to the 0, and that's exactly what it did. You'll see these red and yellow with the dark brown dots. That will be added into next month's indicator setup. That's just an indication of a short setup. You'll see intraday that it's very effective when we get these multiple signalings, and that will, in a lot of cases, it moves up where the short setup takes place, and that's a good thing. This latest iteration, if we scroll back, took into account something we were talking about the other day, which was the dip of that red below the negative, or just into the negative territory, actually below 1, where you then have either the DOC red, green crossing red, or the orange dipping below. That happens to be the green ones, where the orange dips. The blue happens to be just the green crossing above. Next add into it will be also the DOC steel reset, where at least you've had a dip of the steel to 1, or that it's come from underneath cyan and crossed. And the significance of that is the relationship. It shows how recent the power invocation is. Meaning, how active the algo is. The further you get away from that actual crossover point, the weaker it gets. And you can see we were a little ways away when these signals popped in. And that's what led to a little bit of softness, but overall, still worked out beautifully. What's going to happen is you won't see this MBI take place because within this stream of yellow and brown, there won't be any new buy, and that's where you'll notice I've marked right here the second dot because that first dot would get eliminated from consideration simply because of the expectation of lower given what those readings represent. Let's just scroll back to the beginning of the day. We had started off with that buy from the previous Wednesday, and then moving into Thursday, we started the continuation of that climb, and it was beautiful. Consistent readings of the yellow above that 33 level, and certainly staying above the 25, and then we had blue over green, and just a consistent read, which corresponds to cyan under red. Simple as that, and it stayed that way for a long time. And here you'll notice there really wasn't a whole lot of weakness because you didn't get that steel coming up above and then back down below. So it's kind of a good representation of it right there. Where we did start to see a little bit, you had DOC spread, which took place right there. This is where the short would more likely indicate, and this is something that we've talked about. When we get into this flat 0, flat 100, whether colored green or red, when it trades sideways like that, there's no variance whatsoever, so it really doesn't matter. In this case, it would have moved it to red just a little bit sooner. I think that's what 42.03 versus where the red comes in at 42.01. 75, so it's almost 2 in the side trading, and then boom, it would hit that calculus going down, and that's all fine. That's exactly what it's intended to do, to be effective to capture those larger moves, even from 42.01 down to the 93 range. Of course, this is before you had the latest iteration of the PNT2. The interesting thing about these blue and the little green dots where it represents as a chartreuse green, you're getting off of lows. So you're usually within a downtrend. So oftentimes you get either falling shakeout, histograms, even deep dives into the extreme. There are a few extra exclusions to go into within some of these, but you tend to get either the immediate bounce back or a little bit of flat before something builds, and that's just because you're catching it rather early within the setup. And the key with that is that it does get you in at the bottom, but it also exposes to potential break of lows, which in this case, this one did from 85 to 79, so 6 points within the normalized stop range before it shot back up. So from its effective 85, only 2 points within that, but still correct directionally. And you don't know, that could do what this secondary dip did, which is rise 20 plus points. In this case, we were at 41.70, all the way up to 42.07. So, catching the right one certainly makes up for little breaks in between. In this case, you won't even have this green setup here. It would just have held from the 87 all the way until that buy at 70. And so that's what's going to make it super effective and clean, which I like. And then hopefully, as the weekend goes on, before I send out indicators for May, the idea would be that you would just move to editing, and you'll go to format, and it'll be a matter of having a 1 or 0 available if your chart's a daily, that kind of thing. Because daily configurations, we tend to see more effort is exerted when you have just the magenta crossing without some of the other follow-throughs. You'd expect them to continue after initial signal, but it may be a couple bars after it. And that's what the program starts to do. It's just looking for follow-through once we have a trigger, is what I like to think of it as. So hopefully that helps. Certainly, I'll be on the Skype chat for those that have questions, and trade well. And they're going to be exciting for going forward because it's pretty darn effective. Trade well.